Welcome to the Fintech One-on-One podcast. This is Peter Renton, Chairman and co-founder of Fintech Nexus. I've been doing these shows since 2013, which makes this the longest-running one-on-one interview show in all of fintech. Thank you for joining me on this journey. If you like this podcast, you should check out our sister shows, Pitch It, the Fintech Startups podcast with Todd Anderson, and Fintech Coffee Break with Isabel Castro. Or you can listen to everything we produce by subscribing to the Fintech Nexus podcast channel. Before we get started, I want to remind you about our comprehensive news service. Fintech Nexus News not only covers the biggest fintech news stories, our daily newsletter delivers the most important fintech stories into your inbox every morning, with special commentary on the top story of the day. Stay on top of fintech news by subscribing at news.fintechnexus.com/subscribe. Today on the show, I'm delighted to welcome Tricia Kemp. She is the co-founder and managing partner of Oak HCFT, and that stands for Healthcare and Fintech. They are a venture capital firm, very well established, been around for almost a decade, and wanted to get Tricia on the show to talk about the climate today. What are some of the things that she's excited about? We go through a whole bunch of different things. We talk obviously about their investment thesis. We talk about what the last 18 to 24 months have been like from a venture capitalist perspective. We talk about the environment from an entrepreneur's perspective. We discuss what fintech companies need to do to really position themselves for growth and for potential M&A. We talk about DeFi and her thoughts on that today. We talk about the outlook for fintech and much more. It was a fascinating discussion. Hope you enjoy the show. Welcome to the podcast, Tricia.
Hi, Peter. Morning. Pleasure.
Okay, let's kick it off by giving the listeners some background. Why don't you hit on some of the high points of your career to date?
Originally from Los Angeles, undergrad in business school in California, and after a brief stint as investment banking analyst, then had an operating role in a company that was providing payments capabilities, enhancement services, banking solutions, in and around the payments and banking ecosystem. And from there, it was very easy to see the opportunities that were going to be coming in fintech, and joined the predecessor fund to launch their fintech effort. And then about 9 years ago now, three of us launched Oak HCFT, focused on healthcare and fintech.
Right. So what was the reason for doing that? Like you said, you're in the predecessor venture. Tell us like the founding story of Oak HCFT.
We really saw the opportunity of what was going to happen in these two verticals, and is still happening. Mm-hmm. As we all know, there's been 10, 15 years of progress, and there's going to be another 2 decades of right. Making use of data, being more efficient, automating payments and processing in healthcare and fintech, automating back office, automating CFO suites, automating hospital payments. And we just found it very exciting to think about supporting the entrepreneurs that were looking to move these two verticals forward, and saw the need for there to be financial support. We started with the three of us. We have approximately 50 employees at this point, 70 plus portfolio companies. We still think we're kind of in the early innings in both of these verticals.
Is it split roughly 50-50 between healthcare and fintech?
We probably lean healthcare, but we're opportunistic in both.
Right. Well, for this conversation, we're going to be focusing on fintech. What's the investment thesis there? What sort of drives the investment decisions?
We believe that the ecosystems of payments, banking, asset management, insurance are all going to be automated and made more efficient over time. And we like B2B solutions or B2B to customer, whether it's consumer or SMB solutions, in and around all of that. And those infrastructures, with use of better data, use of better technology, software solutions, and we all now know, AI will become part of all this to even a greater and greater extent, GPT. All of those areas have been lagging, right, in terms of becoming automated. And Progress has been made, tremendous progress over the last 15 years, but we believe there's going to continue to be huge progress going forward. So you can take something like payments, right? And we all know consumer payments, and for instance, the US have become greatly digitized over the last 15 years. Business payments have not. Cross-border payments have not. And then all the needs in and around fraud, risk, identity are becoming more and more complex as people are using different devices, different locations. You now have AI, synthetic fraud issues. And so the needs in and around payments or authentication are becoming increasingly more important, not just to the end consumer, but to all the banking institutions and other institutions in the middle. In addition, we've always liked and will continue to like, and I think it was very evident here, a month ago or 8 weeks ago, what we would call the CFO suite. You can then, step into corporate operations, cash management, ARAP, collateral management, everything that is needed, right, to run a real-time, data-intensive, data-authenticated CFO office, whether you are a large enterprise or you're an SMB. We've always believed in those needs. And again, obviously with the banking issues in the last 2 months, it became more and more evident, people tracking their cash and how do we manage it? How do we get the highest yield? There were different levels of capability.
Right.
So we tend to like cloud-based solutions in and around all those areas.
Okay.
Digital identity, for instance, is a big area that's going to become increasingly more interesting.
Right. Okay. So then what about the stage of company? What do you look at there? What's your average check size? And are you mainly focused on the US? I mean, what's the geographic focus?
So first of all, we're stage agnostic.
Okay.
Because, you can find, you really have to be paying attention to the early stage projects and new companies being formed because they're going to impact the growth stage companies. A majority of what we do are growth stage investments, but we do 15, 20% earlier stage in and around these areas. We write checks from, anywhere on the low end of 20 or 25 up to, let's say, 70, 75. Primarily US, but in fintech, we have a handful of European companies, and we have 7 out of Tel Aviv, and then we have a handful out of Latin America.
Mm-hmm. Okay, interesting. And so what's the size of the fund that you're investing from?
We have over 5 billion under management, 5.3. The most recent fund is 2 billion, closed last summer.
Wow. Okay. So then let's talk about the last sort of 18 to 24 months in fintech. Did you continue to invest in the run-up? And then what about in the last 12 months? Are you still writing checks now?
So yes, we did invest, although at a slower rate and less so because of valuation issues and other issues. Company, for instance, Just JUSTT out of Tel Aviv, operations in the US, it's post-transaction fraud, fraud from a consumer to a merchant, and it kind of was right down the fairway of what we like to invest in. So we found a number of opportunities in and around the space. We are always going to support great entrepreneurs and great teams going after an opportunity. But it is true in the bubble, right? Many of the valuations didn't seem to make sense for us. So we, we're more conservative from that perspective. And we believe, now is a great time. You're going to have well-funded startups as well as legacy players have the opportunity to make acquisitions, have the opportunity to tuck in capabilities that otherwise wouldn't. So I actually think you're going to have winners out of this, and it's a great time to be investing.
Right. What about, so the environment today, obviously we've seen lots of layoffs with fintechs. We've seen some distressed M&A. We've seen some non-distressed M&A as well, I guess. But what are your thoughts on the actual environment today from, you said it's a great time to invest. What about from a fintech entrepreneur's perspective?
The opportunity's there. There's still a huge need. And I actually think the past couple of months, again, the CFO suite is an obvious example of the need to have the right tools right in front of you to manage this. So, I believe that actually, from an entrepreneur's perspective, you're going to potentially lose a lot of the Me Too companies and lose the long tail, but the opportunity is there, right? So the ability to build a company that can be marketed and sold to enterprises or SMBs or mid-level companies that is helping them run, whether it's their financial office or it's whether sending payments or bills or accounts receivable, whatever it might be. I think all the need for all that's been highlighted. We all know that profitability needs to be more on the horizon, growth plus a sustainable business model, right? And so I actually think from an entrepreneur's perspective, it's great. You can kind of take a breath and you can build a sustainable company going after these opportunities. The opportunities haven't disappeared. The needs haven't disappeared.
Right. But so if you're one of those companies that's struggling to get to profitability, though, it's I imagine it's a really bad time for you. You must have some, I imagine, in your portfolio, no need to name names, that aren't hitting the numbers that they expected. How are they navigating it?
Well, first of all, very few, if any.
Well done.
I'd say. Well, then you might have to find a home, right? That you're part. If you have a solution that's needed, and you could become part of a larger platform, right? Number one. Number two, there are a number of strategic investors who are actually taking the opportunity to support some of these companies, and they might actually be a great investor for a number of these companies because they also help. There might be a distribution arm, they might be, a potential large customer. And I would keep figuring out, are those sorts of partnerships what makes sense right now?
Mm-hmm, mm-hmm. I mean, M&A has, as I mentioned, it's ticking up in fintech. Let's take aside the distressed M&A because there's going to be some acqui-hires and different things that really are not kind of a great outcome for the entrepreneurs. But interesting, you talked about this is a great time to consolidate and to, how do fintech entrepreneurs position themselves, those that are in good shape, for a really successful exit for their investors and themselves? So what are some of the keys there?
Well, and this is a little bit of our approach, but we've always believed that the majority of fintech exits are sales to strategics. And the way you can position yourself for that is you have those relationships, right? You have relationships as customers or as financial investors, and you're known to the 5 or 6, potential acquirers over time. So they have time to get to know you. As always, you have to figure out if you can become more of an orchestration layer, that if it's in an area where you're going to have consolidation, so you can be the platform that's consolidating others, right? So that you have a bigger platform to be offering any potential acquirer in the end. But you would make yourself known and you'd make your differentiations known.
Right.
Customers, partnerships, everybody that makes sense.
Right. So then, I mean, the IPO window has pretty much been closed for a while. From what you're saying, it sounds like the IPO window will remain closed for the foreseeable future, do you think? I mean, you're talking about strategic acquisition. Obviously, we had a number of IPOs in the 2020, 2021 timeframe. But what's your thoughts on that for today?
It may come back. Who knows, right? But I wouldn't bet on it. And if you kind of go through history or recent history, most fintech exits are, to strategic acquirers. So I would position, if I was an entrepreneur and team, and this is what we chat with, our teams all the time, I would position yourself for that.
Right. Okay. I want to switch gears a little bit. I want to talk about crypto and DeFi, and I want to go back and revisit an article that you wrote. It was in Forbes. I'll link to it in the show notes. You were quite bullish on DeFi as a technology. This was 2021. So, we've come obviously a long way from that. What are your thoughts on that today?
We still think it's going to happen. It's more a question when, not if, Peter. We believe financial assets are going to be digitized over time. And that's not just, what's happened with stocks and bonds, but you go down every asset class that over time they're going to be digitized. And a decentralized financial ledger is a tool to help with that, right? And to help with smart contracts. And we are still believers that this is going to happen over time. It might just take longer, given what's happened the last 18 months. The use cases are evident. The support, I think it's going to take longer to come, and you need the correct regulatory environment, and hopefully that will come along. But decentralized finance and decentralized ledger technology is useful in a number of scenarios, and we believe in the digitization of many assets.
Mm-hmm.
And we have a company, Paxos, right? That basically that's their mission.
Right. So then you would consider in the future making more investments in this space?
I think that, yes, we would. I do believe we all need to figure out how the regulatory framework shakes out. You don't want to put yourself at risk of the regulatory framework changing. And so, hopefully, all right, there will be greater direction in the United States over the course of time. But as we all know, decentralized finance is cross-border. And so, but you do want to be fully regulated, as Paxos is. And so I do believe that hopefully there'll be greater clarity here over the next 6 to 12 months, and then companies could be positioned.
We're recording this on April 20th, when there was a development today in Europe where they actually passed some laws, the MiCA laws. So, hopefully that will help jumpstart things here, because we still feels like we have a long way to go. So then when you look at fintech more broadly, is it fair to say that fintech is struggling? I mean, is your expectation that we will see a flood of failures through between now and the end of the year?
I don't know the particularities of lots of companies, obviously, right? Particularly private. I would say, and you see this in the public indexes and the public stock prices. I think payments companies, enterprise software companies generally are all doing well. I think that you have certain verticals, buy now, pay later, but we have a great company in that space, Plazo, down in Latin America. But the other players, lending companies, direct to consumer companies are going to have a harder time, right? And any company that's sort of a Me Too company that, didn't get scale velocity and didn't get themselves on the path to profitability, may have a harder time.
Yeah, that makes sense. So then I'm interested in the payment space too, because, we had sort of this wave of innovation a decade ago with the wallets that came out, and then was slow to adopt. I mean, within payments, I feel like it's like we're recreating the payment system right now. I mean, like Visa, MasterCard, American Express have had an oligopoly for a long time in the Western world, not so much in outside of that. But how do you see sort of payments evolving over the next few years?
Well, a little bit what I said earlier, we believe B2B payments will greatly evolve, Peter, and it might evolve via vertical, in certain different ecosystems. And you might have those payments tied into other platforms, ERP platforms, for instance. So there's greater control out of the CFO office. The opportunity outside the United States is enormous. And, we have a company, Rapid, RAPYD, which, does payments, 150 plus countries. There's enormous need and social need to automate, digitize, track, make fully compliant 75% of the payments in the world outside the United States. So we believe there's going to continue to be huge progress in and around all that. And we believe there are going to be vertically specific solutions for an enterprise, mid-level, or SMB player in the B2B ecosystem.
Right. The CEO of Rapid, he was the previous episode on the podcast. Hasn't been published as we're recording this, but it will be by the time
it's out. Great.
So really great company. So then what about regions? Companies like Rapid are global, but operating in places like Latin America. I mean, maybe what are your thoughts on Latin America specifically? You've got a couple of different companies. Are you bullish on that region over others, or how do you sort of view the different regions that you invest in?
We're very bullish on Latin America. Now, there are other regions in the world to be bullish on. Many people talk about Africa, for instance, right? But from what we can cover, Latin America makes tremendous sense. And we all know the stats, a much higher percentage of people unbanked in Latin America. You see anywhere from 30 to 50% in publications, a higher percentage of people without credit. Again, why we're excited about our company, Plazo, down in Mexico City. And the pandemic highlighted the need for people to become digitized and for businesses to become digitized. So in a place like Latin America, we believe that there's sort of a social need, and you now have government backing to sort of push many of these solutions and fintech companies forward. And, we all know, and we've all read all the discussion about, Mexico being the supply chain to the US and to Canada, et cetera. And again, the need for B2B payments, the need for it to become more digitized is very evident. Now it has to get from here to there. And, we believe it's an opportunity, and we believe it's going to happen.
Right. And then what do you think about the funding environment? We went through the 2010s, fintech became more and more popular, and then it just exploded during the pandemic. And now it's kind of gone back. The pendulum has swung all the way back the other way. I guess the question is, when do you expect to have a normal funding environment? What is a normal funding environment for fintech?
This might be getting closer to a normal funding environment. Yeah. I mean, first of all, it does the entrepreneur and the management team, no benefit to raise at enormous valuations very quickly, right? I mean, you really kind of want a process and the time for both investors to get to know companies, for the valuations to make sense, so that companies don't end up underwater, for there to be a real plan to a potential exit. And so we believe it might be setting itself back to normal. We'll see is the answer. There'll be a shakeout of companies, as we discussed earlier, over the course of the next 9, 12, 18 months. And I think that you will have the core investors like us. I mean, there are a number of investors that focus on fintech. The fintech investors believe in fintech, right? And, we believe in the management teams, and we believe in the solutions. And so the opportunity to support those entrepreneurs in those efforts is still there. You might lose some of the investors, many people call them tourists, right, who are kind of swinging in and out of fintech. But, the true believers, I think, are going to be here and be here to support the ecosystem going forward.
Right. Okay. So last question then, as sort of you kind of look at the fintech landscape and looking at the investment opportunities that you've talked about, there's a lot of opportunity, but what's most exciting to you, do you think, right now?
If we were going to pick one vertical, I mentioned it earlier, fraud, and then what I'd call identity, right? And of course, this is all being enhanced by AI and now being enhanced by GPT, right? And so identity and fraud are going to have an enormous arc over the next 10 years, right? As everything's becoming more and more digitized. And whether it's a consumer or a business, the ability to identify who is on the other end of a communication or a transaction or an engagement is critical, right? And as the world is becoming more digitized, that need is going up and to the right. And something like GPT actually makes it more complicated, right? Because the ability for fake synthetic IDs, the ability for a fraudulent player to be able to answer the question of who was your childhood best friend, all these kind of multi-factor authorization tools, their ability is getting better. And so the ability to kind of define the identity of who are you dealing with is getting harder and harder. We all know that through fake photos and videos, but in the fintech world, and again, you can read different stats, but even what we'd call the phishing and what we would call the fake CFO, the fake emails sent to CFOs to say send a transaction, and actually that wasn't coming from who it says it's coming from. All of those needs are going to become more and more critical, and that might not be terribly exciting, but it's a huge, huge need for both banks, processors, asset managers, and then it affects the consumer or the business on the other end, right? It greatly affects what's happening. And so as everybody becomes more digitized, the ability to have an identity and a protected identity is going to become more and more interesting and compelling.
Yeah, I completely agree. We've had several guests on the show that are focusing on fraud because, as I tell you, it's a growth industry, right? The anti-fraud space, because the bad guys are going to continue to evolve, and you've just got to.
It's unfortunate, but the bad guys are good, right?
Yes.
So you need to do this.
That is. Anyway, we'll have to leave it there, Tricia. I really appreciate you coming on the show today. Thanks a lot.
Absolutely. Thank you, Peter. Enjoy your day.
Well, I hope you enjoyed the show. Thank you so much for listening. Please go ahead and give the show a review on the podcast platform of your choice, and go tell your friends and colleagues about it. Anyway, on that note, I will sign off. I very much appreciate you listening, and I'll catch you next time. Bye.